All right, here we go. And we are live. Let me turn down my volume a little bit so I make sure I'm not echoing. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Today is March 9th. It is 3 p.m. This is our how to be able to create passive income class. What we're going to end up doing is talking about package, which is the Fibonacci Fundamentals package, and being able to understand how to be able to use that and being able to have a beginner's course to Forex trading. For the people that are just hopping in, one, thank you for hopping in. This is a free session. This is a session that's open up to the public. And also, what we're going to end up doing on here is just talking about a few things, all Forex, and being able to go through everything else that goes along with that. If you're not able to stay all the way to the end, I will end up having this recorded. From that recording, you can be able to look at it over again, and then after that we can go from there. But if you're inside of the classroom right now, inside of this session, please make sure that you end up writing in your name in the text box so I can be able to know exactly who you are. Also, please make sure that you end up telling me if my sound is good. I want to be able to talk to everyone, kind of get an understanding about who you are, where you're coming from, because this is the open session. I invited people, but quite frankly, if there are more people here, then we'll go ahead and introduce each other and go from there. So I'm going to end up leaving this out for another 3 more minutes. This webinar that we should do should not last no more than 40 minutes, 40 minutes to 45 minutes to be able to go through. And then after that, we end up having a special offer for you, and then we'll move on from there. So I'm going to go ahead and be quiet, take a sip of water. We'll go ahead and get started in 3 minutes. Okay, so we back on. I'm sorry, we actually ended up getting disconnected right there. But once again, this is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Please make sure that you end up signing in. Make sure that you end up writing your name inside of the text box so we can be able to get started with that. Very excited for each and every person that actually end up hopping inside of the course. We're actually going to end up getting started in 1 bit. Please make sure that you end up typing in your name so I know exactly who you are, and go through the text box, and we'll go ahead and get started from there. We're going to get started in 1 more minute, and then after that we'll move on. But just so I know who's actually in the class, please make sure that you end up typing in inside of the text box your name and tell me if my sound is good. Let's see. Okay, so let's go ahead and get started. First off, before we end up getting started from here, I know that some people that are actually inside of the classroom are actually new to Forex trading. We kind of have a mixed bag from what I actually know. I know there's some people that actually have some type of trading skill and experience, and then after that, we have some people that are new. If you are new, please make sure that you end up typing inside of the text box. Let's see what you have for your overall education. For the people that have been trading for a while, type in how many years or how many months have you been trading for your overall experience as well. Okay, great. So I'm very excited. Let's go ahead and get through it. I'm going to go ahead and go through the disclaimer. The disclaimer is this. Understand this. Anytime that you end up trading Forex, it's going to end up being a risk. And so that means that, especially if you end up trading, you're risking your money to be able to make a profit. Understand this. Past performance is not indicative of future performance. And I'm telling you from the beginning that I'm not a CPA, which means that I'm not going to end up telling you whether to buy or to sell. I'm going to teach you education so you can be able to have that educational knowledge to be able to make your own valid decision on what to be able to do. But if you're not comfortable with that or anything else like that, probably should not be in this room when it comes down to trading or anything else like that. Just want to make sure that you end up understanding that Forex involves risks, and what we're going to end up doing is talking about how you can be able to minimize those risks, how you can be able to make the best decisions and everything that we end up doing. But before we get started, my name is Travis Witherspoon. I am the creator of Pathfinder Auto, the Precision Entry Point Trading System, Synergy Auto, and a whole different other amounts of manual and automated trading systems. Basically, what I am is a Forex trading specialist. What that actually means is I teach people how to be able to survive inside of the Forex market by being able to give them simple and repeatable strategies in education and mentorship. And within all of that, we end up building a community around of being able to make sure that you can have the most successful time within your overall trading career. So that's my biggest thing. That's my passion. I've actually been, my background has been in coaching over the course of the last 16 years. And this is another way for me to be able to fulfill that passion by being able to teach people how to be able to create passive income. Now, understand this before we end up getting started. At the end of this time, I'm going to end up having an offer for you. Meaning that I'm going to end up offering you, if you would like to be able to join one of our sessions and be able to get go through our actual master course. If you're interested in being able to understand how we do our automated systems and being able to purchase our automated system, or being able to understand how our signals actually work, that's something that we end up doing here. I do have a business. It is a for-profit business. I'm not going to end up shying away from that. That's something that I do, and I think I do very well. Now, with that being said, I need you to understand this. Whether if it's with me, whether if it's in anything that you end up doing, the time is now to be able to invest in yourself. Not in me, not in anything else like that. The time is right now to be able to invest in yourself. I looked at the market a little bit earlier today. The market has dropped almost 1,800 points today. The market ended up getting halted earlier this morning in the Forex market. The market ended up getting halted in the in stocks and bonds earlier today, which means that it's giving you opportunities and it's screaming out, hey, this is the time to be not fearful, but time to be able to understand that you need to get in some type of way. You need to find an area to be able to purchase and be able to go from there and be able to start creating that passive income for yourself. Now, everyone is in here for a reason, right? Everyone is in here for a reason. I don't know what your reason is, but please make sure when you understand what your reason for being here is, make sure that you write down your overall vision of where you're thinking that you're going to end up going with this. And then after that, make it a plan. Once you end up making it a plan and you end up writing it down and you end up putting it in front of your face, it turns into something that is very important to you, and it turns into something that you have to go after all the time. Now, before you end up doing that, you got to understand what's your why. And you have to understand what's your why. Everyone is doing something for a reason. And I'm going to end up typing in my reason right now inside of the chat box. And I'm going to go with a brief story. And then after that, we're going to go ahead and hop onto these charts because that's the reason why you're here in the first place. But my reason are my two boys. It's Miles Carter and it's Mason Kyle. If you notice, my company's name is Carter Kyle Capital. I'm doing everything that I want, doing everything that I've learned and all that other stuff for my boys because I come from a coaching background. I come from a teaching background. I'm born and raised in Charlotte. Ended up coaching when I was 16 years old. Had an opportunity to be able to coach pretty much every sport, but I had an opportunity to be able to be the head football coach at a high school that was around this area. And within that, I actually ended up getting a pretty good salary and being able to do it. It wasn't the greatest, but it was something that I can be able to work with. It was actually right around $10,000. Now, I was into my second year of being able to coach from that position. I actually ended up getting let go. I'm not going to talk about why I ended up getting let go or anything else like that, but I ended up getting let go. And from there, what ended up happening was, it was actually in the middle of the season, I actually ended up losing half of my overall stipend from there. So that coaching position, so I ended up losing out on $10,000. It was really a rough time within that realm, and I was like, okay, well, what am I going to do? How am I going to be able to make this money back? That was the big thing. How am I going to be able to make this money back? And the simplest way that I ended up thinking was, well, let's go back to the original plan that I wanted to do in high school. I wanted to learn how to do real estate. Wanted to learn how to work with stocks and bonds. I actually ran into a guy that taught Forex. And from there, I ended up getting education, and I ended up investing in myself and took my education very seriously. And right now, I'm at this point to where I can be able to freely sit down and understand that I can make passive income each and every day in the Forex market. And it's been nothing but a blessing. So my why is my boys. My why is I want to be able to pay for their college. I want to be able to go through and know that I was the guy that ended up creating that wealth for them, and being able to have them understand how to be able to be financially literal and make their own income themselves without having to work for someone else. I want to be my own boss. They're going to be their own boss. That is what it is. All right. Now, in order to achieve your greatness, you first have to believe that you actually can. So for the people that are actually inside of this room that don't necessarily believe that you should be in here, then you're right. You probably are right. But for the people that do believe that they should be in here, then you have to understand that you can do anything that you end up putting your mind into, as long as you putting in the work. And understand this: once you end up speaking it, you will activate it. When you activate and place in the work, you will see it happen. And once you end up seeing it happen, then there's nothing that can be taken away from you on being able to learn this topic. So we're going to jump into it right now, because some people are interested in the stock market. Some people are interested in the Forex market. I'm just going to talk about it from a Forex standpoint, and I kind of give you some similarities and differences between the Forex market and the stock market in general. Okay, so Forex is short for foreign exchange market. Unlike the stock market, where you own a stock or a bond or a share of a company, we are evaluating the relative value of one currency to another, which means that we're basically looking at the overall value of a currency pair. You look at where we're at. We have the U.S. dollar. The Canadians have the Canadian dollar. The Japanese have Japanese yen. People in Europe have the Eurozone and the pound sterling. So we're looking at those different currency pairs to be able to figure out where's the strength, where's the weakness, and we basically trade between those to be able to make a profit. All right. Now, understand this: the foreign exchange market is one of the most actively traded markets in the world. More than $5 trillion is traded on average each and every day. And by comparison, when you look at equities or anything else like that, that volume exceeds it by 25 times. So that means that the market is very liquid. That means that the market will always have funding within there. So unlike stocks, where you have like a penny stock and you're trying to get rid of it, if you got into a buy, sometimes you're not able to get rid of it. Sometimes you might have to be able to hold on to it for a while. In this case, you won't. You'll be able to get in and get out of the market because how liquid it actually is. If you're trying to buy, there's a seller. You're trying to sell, there's a buyer. There's somebody there. All right. Now, who's involved? The Forex market has various groups and individuals that are heavily trading throughout the world. Now, these people include just regular banks, central banks, hedge fund managers, corporations, and individual investors like you and me. So with all of these people that are being involved inside of the market, with all of that money that's being placed in, there's really one rule when it comes down to actually trading. Go with the popular people. Trade with the popular guys. Now, our problem is, how do you figure out how to do that, right? We're trying to figure out how can we be able to make money within this market. Well, obviously, you have to sit up there and place your money in with people that basically agree with you at the same time. Okay, that's the simplest way of being able to say how you can be able to make money. I can tell you to buy low and sell high. Obviously, people can say that all the time. But when you're selling, you can sell high and then buy low. Well, what does that mean inside of this market? That means that you end up making a decision that you're going to end up buying or selling and other people agreed with you. And that's how you end up creating a profit. Now, the difference between the Forex market between any other market is that it's open 24 hours a day, 5 days out of the week. So that means that the market opens at 5 p.m. on Sunday, and then after that closes at 5 p.m. on Friday. There's 3 different sessions that we end up looking at. There's the Asian session, which ranges from 5 p.m. to 6 a.m. Eastern Standard Time. You have the European session, which ranges from 2 a.m. to 11 a.m. Eastern Standard Time. And then after that, you have the U.S. session, which ranges from 8 a.m. to 5 p.m. Eastern Standard Time. And all of these have some type of correlation between each one, but the largest market, the largest swings in the market typically happen from the London session, because all 3 markets are basically open, or with the U.S. session, all of the transactions that happen from the U.S. session basically goes to the European session. So understand, when you're getting started, you will lose. All right. Everyone's going to end up trading. You're going to end up losing money. All right. You're going to take the emotion out of it, because I'm telling you right now, you're going to lose money. But understand that Forex is a win or learn business. I didn't say Forex is a win or lose business. All right. Anytime that you end up making a trade, you understand that you're going to end up placing money at risk. So that means that you have to be able to learn to be able to place your money in places where you're having less risk attached to it. In order to win in this business, you have to understand people. You have to take away your emotion, and you have to have a simple yet repeatable plan and a way of trading. Okay. Now, when I'm saying understanding people, that goes back to the original thing that I ended up talking about. You have to be able to trade with the popular people. Well, once again, we're going to talk about how you can be able to do that. All right. Now, there's 2 different types of ways that you can either trade. You can either buy or you can either sell. That's pretty much it. All right. You're either buying or you're selling. Now, if you're a buyer, then you're considered a bull, which means that you want the market to be able to move in an uptrend. Now, in an uptrend, what happens is that you end up getting higher highs and higher lows within that. The market just doesn't move up or down. It just doesn't tank. We look at what's going on with the market right now, right? We look at what's going on with the U.S. dollar. The U.S. dollar is just not just going to fall down to the ground and goes to oblivion, right? The market is going to end up retracing. Then after that, it gives you a chance to be able to get in. Then after that, you have bears. And bears want to be able to make the market move in a downtrend, which means that they actually want to sell, where you end up getting lower lows and then lower highs in the market from there. Now, understand this, because what we're going to end up talking about is Fibonacci trading and the Fibonacci sequence in general. All right. There are no guarantees in trading. The sooner that you accept that, the sooner that you can release your expectations and focus unconditionally on a proven process. Now, we're talking about Fibonacci trading, and if you're familiar with Fibonacci trading, please make sure that you end up writing that down in the chat box. We can be able to talk about that for a brief second. If you've ever traded it before, this would be a good time to be able to say that you understand something about it. But what makes the Fibonacci type of trading, the Fibonacci sequence, so much of a proven process? Well, it has 4 different bullet points that are very key to it. It has it's research-driven analysis. The Fibonacci sequence has been recognized since 1202. It's used outside of Forex trading, which means that scientists have discovered the Fibonacci sequence to be pretty much anywhere. You look at pine cones, you look at pineapples, you look at sunflowers and the way that they're formed. You look at art and the way that people end up doing art. Look at music and the way that is basically being constructed when writing and when being able to talk, right? The Fibonacci sequence is basically used everywhere in that. So naturally, it's actually used inside of trading as well, because it's very simple and repeatable. Now, Fibonacci trading can be used in any market condition without any type of adjustment, which allows you to be able to have consistency when you're going through it. And it's a profit generator. Now, when I say profit generator, that means that you can be able to find pinpoint entry and exit areas which lead to consistent trading. And consistent trading leads to consistent profits. And consistent profits leads to you being able to create passive income over and over again. Now, we're gonna go through 4 different bullet points on being able to understand how the Fibonacci sequence was created, how you can be able to trade it, how you can be able to use it, and be able to earn inside of this market while being able to do that. So the first thing is going to end up being history. The second thing is going to be ratio. The third thing is going to end up being retracements and extensions. And we'll briefly talk about what's in our trading strategy and give you some extra goodies while we're actually going through that. So everything starts and ends with Leonardo da Pisa da Fibonacci. Fibonacci was the son of an Italian businessman in the city of Pisa, and his father was a merchant. And what he ended up having Leonardo do was basically keep up with all of that commercial transactions. And one of the transactions that he ended up having, which I believe was kind of by accident, was rabbit breeding. And what he ended up doing was he ended up shutting the door on rabbits and being able to make sure that they were safe. And then 1 month after that, he ended up seeing that there was 2 of them in there. And then after that, it turned into a different number. And then after that, it turned into a different number from there. They ended up finding more. He opened it up, and then after that, found a different number from there. So what he ended up finding out based off of this problem was that that created a sequence, and that sequence involved adding the 2 preceding terms to one another to generate the next term. Now, what do I mean by that? If we look at this sequence, I'm going to end up starting with 0. Okay, so we got 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233. So what's the next number? All right, write that down in the text box. Let's see what you write down. I'm going to take a drink of water real quick. Okay, somebody got it. All right, cool. All right, now understand this. The string continues indefinite. All right, that next number would have been 377. Okay, now let's explain how we end up getting that. If you look at the sequence, you got 0 plus 1 equals 1. 1 plus 1 equals 2. 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8. 5 plus 8 equals 13. 8 plus 13 equals 21. 13 plus 21 equals 34. 21 plus 34 equals 55, and so on and so forth. So the way that they end up getting that was by looking at 144 plus 233, and they end up getting 377 was the actual number. Now, with that being said, we use those numbers to be able to generate ratios. Now, what ratios represent is a potential U-turn area, and it forecasts what a price could potentially go. Now, the most common ratios that you'll end up seeing is the 23.6, the 38.2, the 61.8, and the 78.6. These represent how much of a prior move in price has corrected or retraced. Now, that's going to be very important with what's going on with the market right now and being able to see how far this market is going to end up moving down or up in a position, and where could you potentially find a U-turn area. Now, the way that these ratios were found were basically using the sequence and dividing the numbers. And once you end up dividing the numbers, you end up getting a commonality to them. Now, let's explain what I mean by that. Let's look at the first number. It is the golden ratio. It is 61.8. The golden ratio is a special number that's equal to 1.618, and you find this number by dividing that number in the Fibonacci sequence by the previous number in the sequence. Let's take a look at an example. If we scroll down and we end up look at the numbers that we end up talking about before, 233 divided by 144, you end up getting 1.618. 377 divided by 233, you get 1.618. 610 divided by 377, 1.618. You look at everything on this right-hand side, you see 1.618. That is not by accident. All right. If we go to infinity, that number will still be 1.618 as the overall ratio or numbers between dividing the first 2 numbers behind each other. Now, the next one is known as the value trade, which is the 78.6. Now, the way that you end up getting that is by multiplying the golden ratio by itself. So you look at it, 0.618 times 0.618, you get 78.6. Now, the reason why this is called the value trade is because it gives you a low risk to high reward probability of a trade. Now, understand this. I don't know about you, but anytime that I'm in the market, I understand that I want to risk as little money as possible to be able to make as much money as I possibly can. All right, I'm going to say it over again. Anytime that I'm in the market, I understand that I want to risk as little as my money or a little amount of my money to be able to make as much as I possibly can. So to give you an example, if I'm saying I have to risk $100 in a trade, I want to be able to make $300 to $400 or more, meaning that it gives me a high risk reward ratio anytime that I end up taking a trade. So like the 78.6 is one of them areas where you're always going to end up risking less than what the actual extension of that move will actually be. Now, another percentage which is very important is the 38.2. It's also known as the safe haven. The safe haven is derived by using the Fibonacci sequence and dividing those number two places to the right. To give you an example, we'll look at 55 divided by 144. You get 0.3189. If you divide 89 divided by 233, you get 0.3189. Now, the reason why this is called the safe haven is when a market is actually retracing. So we look at where the market is right now. We see that the market on the euro dollar is going up, right? But the long-term move has been bearish, right? Meaning that sellers were basically controlling the market. So as long as the market ends up retracing at least 38.2% of that actual move, and then after that starts the U-turn, then that means that it's been a healthy movement in the market. If it does not move beyond 38.2 and actually starts to retrace before then you'll end up being in a position called the short, which is the 23.6 position. Now, this ratio is derived by looking at the Fibonacci sequence and dividing it three places to the right. To give you an example, you look at 8 divided by 34, you'll get 0.2352. If you divide 89 into 377, you'll get 0.2360. Now, anytime that this happens, that means that the market is going to end up facing some type of support or resistance at the 127% extension. And we'll actually go through that in a quick second. Now, like I ended up saying before, you end up having retracements, which means that the market is starting to correct itself in a uptrend or a downtrend swing. But then after that, the best thing about being able to use this sequence and being able to use this style of trading is that it can predict positions of where the market is going to end up going. So let's go back to retracements. Retracements look at levels and applies percentages of a pullback between the support and resistance of a AB boundary. The extension forecasts the price where it will go after breaking the AB boundary, and those three numbers include the 118%, the 127%, and the 161.8%. Okay, so looking at this ratio, let's go ahead and go through it and take a look at this chart that I have. I'm going to take a swig of water real quick, but type in a Y or yes if that makes sense of what I'm talking about. Okay, good. So if we're looking at this, you can see that it's kind of color-coded. But what happens is this. Each retracement level has a high probability extension that it forecasts to. And what that does, it completes the D extension. Now, I've been talking about ABCDs, and if you look at any of my ABCD videos that I have on the Carter Cal Academy, then you'll be able to understand that from this position, the D extension is the level where the market is basically extending out to. So we can be able to figure out where the price is going to end up going in the future. Once we end up getting towards our C and finding that actual position, it allows us to be able to capture as many pips as possible and get as close to that actual position or let that position actually hit. So to give you an example, we look at the retracements. Anything between the 23.6 to 38.2 to 50 or the 61.8 extends out to the 161.8 extension. If it retraces 78.6 or the value trade area, then that means that it's going to extend out to the 127. If you look at the 86% or the deep retracement area, you'll see that the market actually retraces or extends to the 118% position. Let's take a look at an example of this. Okay. Now, we talked about ABCDs in general. Understand this. In a uptrend and a downtrend, basically the same thing happens, but you're just looking at it from a different perspective. In a uptrend, it consists of an AB rally. So it starts off at a very low price and then it goes up to a high price. From there, if people were buying here at this particular point, once it gets up to a high price, that means that people end up starting to take out profits. So that means that once you have a buy, in order for you to be able to create a profit, you have to turn that into a sale. You have to sell it to someone. All right. Now, when multiple people are selling off, then that means that you end up getting a retracement, meaning that now the market is actually going away from the initial move. Once you end up getting to that C position, then that means that the market will start to U-turn. From that retracement area, you can be able to figure out where the D extension is based off of the Fibonacci ratios going within that, which will end up leading to a new high price, breaking past the B high in this case. Now, the complete opposite happens in a downtrend. From A to B, you end up having a drop. From that drop, sellers turn into buyers, so you end up having a lot of buyers within that session. After that, once it starts to U-turn again, now your C will end up predicting where your D extension is, and after it ends up breaking the B low. Okay, so by being able to use this system and doing it over and over again, it turns into something that's simple and repeatable and something that's very consistent on being able to figure out where the D or where your percentage is going to end up being. Let's take a look at an example. Now, if we look at it, the market ended up rallying from 71.57 in this position, which is the low price, to 77.46. Creating a AB boundary within that point. Then the market actually ended up retracing to the 61.8 level, or the golden ratio type level. And if you would have basically bought it at this position, you can end up saying, okay, well, my D extension at this point is at 81.10. So I'm going to end up putting my take profit at 81.10. Now, without looking at everything that ended up happening within this move, because obviously we're looking at it as hindsight being 2020, by being able to look at your retracements, you can be able to get a good idea about where the extension is going to end up being, whether it's long-term, short-term, scalp trades, swing trades, position trades, or anything else like that. Okay? So, in this case, we look at it. Green retracement goes to the green extension. Gold retracement goes to the gold extension. Red retracement goes to the red extension. As long as the market does not break below the A, the market will continue in the direction of the first move. Okay? As long as the market does not break below the A, then the market will continue and complete up to its D extension within that move. So let's take a look at a downtrend example. We look at it, the market ended up dropping from 80.51 to 79.66, creating a AB boundary. Then after that, it ended up retracing up to the 78.6 level, which is the value trade. And then after that, we can end up seeing that the market ended up extending this drop to the 127 position, went back up, and then after that, continued past that actual position. So what does that mean? When we're looking at it, we see that the market ended up retracing to the 78.6 level. If you would have got in it on this sale, then that meant that you are only risking whatever it is above that position. And then after that, we're expecting the market to be able to go down to the 127%. Now, on this one, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days for the market to be able to move all the way down. And once it hit this position right here, you can see that people started to take profit because that's what the D extension actually was. So it pushed back up right above the B high, and then after that continued down once again from that position. Now, how does this tie into our overall strategy? Well, let's go ahead and explain exactly what you're going to end up seeing within our strategy and why we believe that it works so well for us. What you're going to end up learning is how to accurately plot Fibonacci retracements and extensions on charts and determine the actual trading zone and style of trading that you should make necessarily to safely maximize profits while minimizing losses. Now, obviously, that's the biggest thing that we want to do. We want to maximize our profits. We want to minimize our losses at any time that we end up making our trades. So how do we do that? And what would you be able to learn within this strategy? Well, what you end up getting is a breakdown of our strategy. You end up receiving basically an ebook that basically breaks down everything that we end up looking for and how to be able to trade it. Then after that, you end up receiving videos that go along with that corresponds to each chapter that you end up reading within that book. You end up getting a copy of our ranking system. Now, what you need to understand is this. There are 5 different group pairings that you can be able to place any trading pair in. Now, there's 6 majors and there's 22 minors that we end up looking at. That basically ends up meaning that there's 28 different trading pairs that we end up looking at for getting into. Now, if we can be able to group all of them into 5 different areas, then you can easily be able to spot out which trades are in the best position to be able to get in first, and then after that, go through the next rankings of those overall trading pairs. Then after that, you're going to end up getting ongoing mentorship. So what we're doing here is that I want to see you have success. That's my overall goal. My goal here is to make sure that you are successful. And the only way that I can be able to do that is by being able to give you mentorship and having you watch over my shoulder and teach you how to be able to trade within that actual time. So what we end up doing is we have 16 classes that we end up going through, which basically runs 2 months. Out of that 2 months, we start off in the first month basically teaching you everything that you need to know for its overall trading and making sure that you understand the system of way that we end up trading from there. In that second month, we end up starting to let you kind of build off of it and start to be able to make money on your own and actually go through and talk about each trade so you can be able to gain that confidence that you can be able to trade by yourself. Now, obviously, while you're going through that first month, then what we're going to end up doing is we're going to go through each and every position, especially the major pairs. And if there is a position that you can be able to get into, then we'll end up talking about what trade idea and what strategy we would do to apply to that. Now, if you're interested in being able to make that trade, then you can be able to trade with us and be able to bask in some of the profits that we end up taking. Speaking of basking in some of the profits that we end up taking, in February alone, our students end up making a monthly total of 793 pips. Now, understand this. I'm getting ready to show out an offer to you when it comes down to how much this is actually going to cost. And I want you to keep this number in mind, 793. Now, if you're not familiar with lots or anything else like that, and you have enough money inside of your account to be able to trade, you can trade $1 per pip. $1 per pip is a price interest point, which means that it goes based off of the lowest denominator of a currency. Obviously, the lowest denominator of our currency is the penny. So there's 100 pennies in a dollar. So that means that every time that the market moves 1 cent, then that means that the market ends up moving 1 pip. So if we're looking at this 793 pips, when it came down to it, it's going to tie into what we're getting ready to talk about in a brief second. All right. Now, you'll also end up receiving discounts on our future projects. And what I mean by our future projects is that you have an opportunity on being able to demo our Synergy automated trading system. Now, this is not going to end up lasting long because we're actually getting ready to start pushing this out into the market. For the people that have been trading at the beginning, they've been very excited about some of the moves that we end up having. We just had a move that was 132 pips of actual trading, and we actually got out of it too early. It really went down to 189 on the euro yen. And if you want to take a look at one of my previous videos where we end up talking about that, you'll be able to see that. But what you end up receiving is one fully optimized set file. You end up receiving a trial file of this, and you'll end up receiving a video basically end up showing you how to be able to work it and getting you started with it. This way of trading is really set up to where you can be a swing trader yet or position trader based off of the pairs and be able to go after large swings in the market when the market is synergistic. All right, so I end up talking to you about that 793 pips before. Everything that I just talked about, I believe, has a $799 value, which means that if I was selling this to anyone else that wasn't you, that was sitting inside of this classroom, they end up talking to me, I would end up selling this to them for $799 with everything that we end up having. Now, for a limited time offer, I'm going to end up offering this for $499 for the 2 months span of being able to get the course, get the mentorship for the 2 months, and being able to trade based off of that. If you're interested in being able to get the Synergy Auto system added on with it, then it will end up being that $799 value instead of how much it actually would cost when we end up running this thing out going into that point. So let's go back and let's talk about this real quick. I'm going to show this on your screen again. For the people that end up getting into this course, last month in general, they end up making 793 pips. If you end up going $1 a pip, then that means to me the only thing that you have left to be able to pay on is $6. I mean, think about how crazy that is. For the people that end up starting with us earlier, you end up making that amount. And it's private sessions, so we work based off of your overall schedule. But that means that if you're not able to meet up on a certain day where everyone else is meeting up, then I end up setting up that time to be able to meet with you. So I think this is a great offer. If you look at it, you want to really break it down in a two-month span just based off of $500. That is $250 per each month. I think that is very doable for anyone and everyone that wants to be able to invest in themselves. Now, if you're not one of them people that are ready to do it at this particular time, or if you're one of them people that are ready to go at this particular time, please make sure that you end up writing your name and your phone number inside of the text box, and we'll go ahead and get a hold of you and start talking to you about how we can be able to get started. My overall goal is to be able to help 25 people to be able to do it this month. That's my overall goal. I know with us being a business that just got started over the course of the last 7 months and being able to work through that, sometimes that may be very lofty in our overall goal. But I truly believe in this plan because this is the baseline of everything that I end up doing for its automated trading and for its manual trading. But if you're ready to go, ahead and get started, you can go to this website, cartercowcapital.com/Fibonacci Fundamentals. What you can be able to do is go ahead and pay for it right then and there on that actual site. If you decide this is not the actual time to be able to do it, if you're not ready to invest in yourself on being able to create passive income each and every day on being able to do that, you can still connect with us. And I want you to be able to do that because to me, once you end up leaving out of here, you're still family to me. So please make sure that you end up going to our Facebook page, which is facebook.com/CarterCowCapital Inc. And you can be able to go into our Carter Cow Academy, in which we end up meeting or we end up having pre-recorded videos on Wednesdays and on Sundays. You can go, talk to us on Twitter. You can talk to us on YouTube. We actually end up placing up recap videos and different things like that. And we're going to end up pushing very heavy on and doing our YouTube game and trying to get that to be more of a stable type of community. So I'm very happy if you're going to end up jumping on with us and be able to start through the infancy of that some more. And then after that, we have Instagram where we end up showing some of our recap videos, some of the things that we actually end up doing. But that is my time. I end up saying I'm going to end up getting done within 40 to 45 minutes. It is 3:44. I don't try to sit up there and lie to anybody. I want to make sure that I can be able to maximize your time within this session. Now, if I provided value for you, please make sure that you end up typing in side of this box or send me a message and say that, hey, this is something that I really needed. This is something that I end up helping you out on. If there's something that you think I should basically end up talking about a little bit more, then go ahead and send it to me. We can basically end up going from there. But I really do appreciate the time that you end up investing in yourself just to be able to speak to me or just to be able to listen to what I end up having to offer. And like always, plan your trade your plan, and then after that, you end up putting yourself into the best position. Everyone, y'all end up having a good one. I'm about to sound out right now. This is Travis Witherspoon out.